Hello and welcome to this month's edition of The Benchmark, looking at issues affecting agriculture and volatility. This month I'm joined by Jessica Edinger, who is our Senior Principal Analyst for Sugar. How are you doing today, Jessica?
I'm doing great, thanks, Peter.
Good. So starting with raw sugar, the number 11 futures contract in New York, it declined to a 5-year low in mid-February. So what exactly have been the fundamentals really pushing prices down for the past year and a half for that contract?
Yeah, we've been flagging this for a while. The 25-26 season started with a surplus. We expect more than 1 million surplus on the supply and demand balance. Not only the 26-27, so the following season is also seeing a surplus of more than 3.5 million. So the reasons behind is higher sugar production in the main producer and exporter as Center-South Brazil and Thailand, combined with also higher production in India. And while the supply is higher, the demand has also been weak. So if we take the two main importers, which is China and Indonesia, 25-26, they're expected to import a lot less, combined nearly 1.8 million metric tons lower. Nonetheless, the Indian production has a downside. Still expected higher year on year, but there has been significant downgrade to production estimates. However, this is very unlikely to affect prices as we don't see much exports coming out of the country. Domestic prices are high, so export parity is close, so the impact on global prices should be limited. But on the other side, the demand should be monitored. If Indonesia government decided to release more important license, so we could see higher demand. And I would say, of course, the main monitoring point would be CS Brazil. If there is cut on the sugar mix, it translates directly into lower exports to world market.
Okay. And just picking up on what you said about China and Indonesia importing less, is that purely for domestic reasons to protect their own farmers, or is there something else at play?
Yeah, different reasons for both of them. China has been strong domestic production over the past two seasons, so 24-25 and 25-26, higher production. So they actually don't need much more import, but they can always try to replenish stocks when prices are very low.
Of course.
For Indonesia, the import is controlled by the government import license, and this year they released much lower import license. However, the stocks in the country are at low level, so they could decide at any point to release more import license, and this could impact trade flow surplus and therefore sugar prices.
It's definitely one to watch. Okay, well, thanks, Jessica. And obviously you were mentioning Center-South Brazil, largest producing region and the largest producing country. So with Brazilian harvesting upcoming, what exactly are the expectations for the crop there? And are there many expectations yet for, well, how much of the cane which goes to mills will be used for actual sugar itself or for ethanol?
Yeah, that's a very good point. And this is the focus of attention for 2026, I would say. In Brazil, mills can easily switch between ethanol and sugar production to wherever would pay more. And since October 2025, hydrous ethanol prices have been strengthening and currently are at a very high premium over sugar. So we expect that mills at the beginning of the crushing will start focusing on ethanol. Once the hydrous stocks are replenished, then they could switch more to sugar. Still, last season the sugar mix ended at a multi-year high, nearly 50.7%. And for 26-27 national crop, we expect lower because of these high ethanol prices, as I've been mentioned. So we will need to monitor also how the demand for ethanol goes against gasoline. And not only, there is also another factor to monitor is the corn ethanol production. Corn ethanol production has been increasing over the past few years in Brazil, and for 2026 is no different. We expect a continued growth of corn ethanol. So even if the hydros demand increase, corn ethanol could cover part of this demand.
Okay. And if actual oil prices increase, crude oil that is, that should have quite a bit of an impact in terms of where mills are dedicating the raw product towards. Is that correct?
Exactly. That's a very good point. So gasoline prices, that, as I mentioned, were just cut, but with higher oil prices, the opposite can happen, and then gasoline prices go up, hydros demand goes up, and then less sugar production. So a lot of factors to monitor and to keep an eye that can switch the sugar price direction.
Okay, perfect. Thank you, Jessica. And lastly, I just wanted to step away from Brazil and think about any other sort of factors, or fundamentals, I should say, which are playing on the market as we're getting further into 2026. What exactly should we be looking out for?
Right. I would point out three factors for us to watch. One is the speculative position. Speculators are at a record high net short position, meaning if, let's say, there is any bullish news and they decide to cover this position, it can amplify sugar price. In case of bullish news, it could amplify prices up. Secondly is the weather. There is higher chances of developing El Niño for second half of the year. And this is very important for sugar because El Niño usually brings dry weather for important producers as India and Thailand. So our production prospects could become more negative if El Niño really develops. Last but not least is the strengthening of the Brazilian real. Brazilian real has been strengthening against the dollar. Actually, it hit recently a year high. And this could discourage exports from mills in Brazil. So another factor for watching this year.
And, I mean, I know that I said that we try and steer clear of Brazil, but just sticking with Brazil, you mentioned El Niño and how it would have a bit of a detrimental impact on, or potentially have a detrimental impact on places like India and Thailand. Is there much of an impact for Brazil, certainly in the centre-south region, if an El Niño does happen later in the year?
Yeah, the impact of El Niño is less straightforward for Brazil, but could definitely bring higher than normal rainfalls for Brazil. And this, at the peak of the crushing, could both delay the harvesting and then crushing, and also slow down the loading pace for exports. So if it brings higher rains, then it's definitely bullish for prices.
Okay. Right. Well, thank you very much, Jessica. Another one to watch. So thank you again for all of your insights, and thank you everyone at home, on the commute, or in the office watching. Hope to see you again soon. Thank you.